I see stiff competition with China. China has an overall goal, and I don't criticize them for the goal, but they have an overall goal to become the leading country in the world, the wealthiest country in the world, and the most powerful country in the world. That's not going to happen on my watch, because the United States is going to continue to grow and expand.
That was President Biden speaking yesterday concerning China. Those comments come as Western companies like Nike, H&M, and Adidas face boycotts in China because of the stand that they've taken against the alleged use of forced labor. Joining us to talk about what this means for investors is Leland Miller, the CEO of China Beige Book International. Also, DeWardrick McNeil, a former Obama administration Defense Department official who's now Longview Global Managing Director and a CNBC contributor. And gentlemen, thanks for being here with both of you. DeWardrick, why don't we start with talking about what this means for global companies. We mentioned some U.S. companies, some not U.S. companies, but this seems like a time where companies are going to be forced to take sides and maybe not move quite as easily as multinationals as they've been in the past. Do you think that?
I think so, Becky. Look, if you're a Western brand with a retail footprint in China, you are eventually going to be forced to choose a side or conform to Chinese interest, values, and norms. And so I think it's time for Western companies to really reassess their assumptions about China and make sure that their strategy is very well suited for today's China. This is a time for you to understand that the China of 20 years ago does not exist. And the ability to thread the needle and not choose a side is becoming less and less possible. So I think we're going to see a lot more of this. This Xinjiang boycott is just one of many issues that Western companies can find themselves in contravention of what the Chinese market is expecting for companies in their market to do. And so I think we have to take this serious. This is not a time for best case scenario planning because we're not in the best of times.
But that's a pretty dire outlook for companies that have been operating as multinationals for decades at this point and have built up markets not only here, but also in China and in other Asian markets, other places. If you're saying you have to choose sides, I mean, you got to pick which customers you stick with and which ones you're willing to cleave off?
Well, I'm not saying it, but I think we've seen over the last 2 years or so that the Chinese are certainly saying it. I mean, they're not going to really allow for the sorts of statements, company values, corporate social responsibility that we're used to in this country. That may not play well as we've seen in China. And so, yes, I think at some point you may have to decide. And I know that sounds grim, but again, I think one of the mistakes that Western brands have made is focus on best case scenario planning and not the reality of meeting China where it is today. And this is not the China of 20 years ago. And, H&M made a statement about working with 350 brands, and that's all good, but that's not what the Chinese care about. They don't care how long you've been in China or how many brands you've been working with. They were not happy with the Xinjiang statement, and that's what H&M and Nike are being punished for. And I think we just have to speak real to companies, and companies need to speak real to investors about what the risks are when you depend on the China market in this environment.
Hey, Leland, why don't you describe a little bit about this situation, what happened and where you think it goes from here?
Yeah, we've seen boycotts before in the Chinese market against Americans or against the Japanese companies or against Korean companies, but this one really feels different. There's sometimes a pushback. It's a lever for the state to be able to summon Chinese consumers that are already very nationalistic and to push back and as one lever of geopolitics against certain kinds of companies pushing policies they don't like. But this is a little bit different because when you look back at what has been happening, and this is not just about bad policy choices or something that the Chinese are objecting to in a broad way. This is about Xinjiang. And Western firms have thought for a while that they could sort of thread the needle by saying we're not involved in any of these problematic supply chains, but we still object to or at least recognize that there's a problem in Xinjiang. And what the Chinese have now said is that that's not acceptable. You have to actually be very clear that Xinjiang is not a problem in the supply chain. So they're creating a black and white issue here it's going to be very difficult to extricate from this because the Western sides are saying you cannot participate in this supply chain, and the Chinese side is saying that signals that you're anti-China. So this is black and white in a way that other types of boycotts weren't in the past.
Shepard Smith here. Thanks for watching CNBC on YouTube.